Okay, so thank you all for coming tonight. My name is Amanda O'Connor and I'm with Dominion Lending Centres Calgary. We're a franchise. Our office is just on McLeod Trail South. I've been in mortgages for 2 years now, and I'm here to tell you about what you need to know about mortgages. Okay, so we'll go to the next slide. Oh, and Dawn Cherry is our spokesperson, so that's why Dawn is here this evening. Pre-approvals, some people are calling them pre-qualifying. They're pretty much a standard thing now, and in fact, many realtors won't be able to take you out to start looking at houses until you are pre-approved. The most important thing with a pre-approval is before you speak to your financial lender, your financial advisor, or your mortgage professional, really have a good think about what your needs are and what your wants are. Think about your lifestyle, so that would, take into account location. Think about your budget. Think about what you can compromise on, because you will be compromising on something. Think about what your needs are this year and what they are in 3 years and 5 years, because it's your first place. You are probably only going to be in it for 5 years. It depends. You may get transferred to a different city, you may get married, you might want to move into a bigger place, you might end up not liking the neighborhood you're in. So your first house probably isn't going to be your forever home, so you have to kind of balance what you want and what you need for a certain amount of time. One thing to really think about before you become a new homeowner is homeowner expenses. Again, if it works for you, make lists. You have to come up with a down payment. Once you're a homeowner, you have to pay heating. You might have condo fees. You'll definitely have homeowners insurance and property taxes. And now it's your house, so you're responsible for maintenance and repairs. But as well as homeowner expenses, there's home buyer expenses, closing costs. And when you're a first-time home buyer, you have to pay all of your closing costs yourself. Once you're a home buyer and you have some equity in a house, and now you're moving up the property ladder, you can then get a new mortgage on a new place. It could be a renewal or a refinance. At that point, you can add the closing costs on so that it's financed over the long term, but your first time home buy, you have to come up with all the closing costs yourself. So if it's new construction, that includes GST. It might include mortgage insurance premium, which I'll explain in a minute. It will most certainly include an appraisal fee, a land transfer tax. You'll definitely have moving costs. Your realtor will go through this with you, but you'll probably have a home inspection fee. You'll have survey fees, application fees, legal fees. When I say not all pre-approvals are created equal, that's because depending on where you go, some of them may do a very superficial look at your finances and give you an idea of how much you can afford, but it's not something you can really take to the bank, so to speak. So it's better to sit down with someone, whether it's a lender or a mortgage broker, and have a real thorough discussion, fill out an application, have it actually pre-approved. How much can I afford? Continued. Okay, so down payments. So, depending on the interest rates, which are really good right now, your down payment may go further than you think, or it may not go as far as you would imagine. Your down payment can come from different places. It can come from your savings, obviously. If you qualify, it can come from your RSP. You can also get a down payment as a gift. So that's usually from a family member, like a parent or a grandparent. And if it's a gift, then the lenders will look for a certain letter saying it was a gift, because they want to make sure that it's not a loan, that you're not taking on a financial responsibility to then repay that. The lenders want to know about all of your financial commitments so they can make a really good evaluation about what you can afford. Scotia Bank actually has a program for first-time home buyers, and they lend you the down payment. Okay, so you have to qualify, there's certain restrictions, and it's a 5% down payment. But basically, with that one, you could become a first-time home buyer with with closing costs and a 5% down payment.